When I get involved with a company, it's to have their back. If I were there to look over their shoulder, then I shouldn't have invested in the company if I don't trust them. I have to trust them. I might think they don't know about certain areas. I might think that they need some mentoring. I might think that I bring knowledge that I don't want them to have to learn on the street. I'll just teach them how to do it. And for most of the people I know, that's the way that they operate. It's to help the company succeed.
You might have money from high net worth individuals, you might have money from a fund, you might have money from the government, you might have money from a foundation. And not everyone who's put in the money has a vested interest. To them, it's just a portion of their portfolio that they're, dedicating to startups or dedicating to something. And for me, it's different.
We always ask entrepreneurs to tell us what their expectation is. And I think most other groups do too. And that's tricky because if the number's too low, they've left money on the table. If the number's too high, quite frankly, a lot of folks are likely just to walk away and say they're unrealistic, we're gonna walk away. Now, if we see a company we like and the valuation ask is high, we'll actually talk to them about that and say, where did that come from? Why is that your number? Here we're thinking more along these lines. If that's not going to work for you, let's stop talking. But if you're willing to be flexible, then we'll have a conversation.
How do I know which one to get involved deeply and which one not to? It really varies based on how much do I know the management? Do I think that this management team can use my help, or do I have value to add to them? Are they asking for the help? Do I know some other investor who's spending time with that company and doesn't require me to spend the time? So there's a number of different things that come into play. And it's something for you to really talk about with most of the investors. Most of them have an idea in their mind before they say yes, is what level of involvement they want after they might give you funds.
To me, I take a personal interest in, there could be a time or a situation where it's just strictly a financial decision, but right now it's not. Again, I'm not in it to see these kids lose. So what does that mean? That means you got a piece of me in there, and then what does that mean, right? That means that I got to go to work for you.
For some, I think it's 2 or 3 months getting them going, getting enough money in place. Typically, right after taking in funding, there's a key hire or two, or there's getting a project kicked off to get the product exactly where it needs to be, or it's the first execution of customer acquisition, and so they need help through that kind of stage. But then you pretty much expect them to be moving on, and you back off a bit, and they should want it that way. They don't want you actively involved on a constant basis.
There's no standard answer. I've observed some of the companies that they're really wise. They put together a great group of advisors, and that's where they get their, sense of direction. So I can observe that, and if I see that that's running well, there's really no need for me to step in unless there's some other, something that needs to be said.
We want to work with entrepreneurs who are interested in our perspective and want to have a dialogue with us about what really makes sense. Not someone who's going to write down a list of everything we say and go do exactly that, because you need an entrepreneur that's willing to defend their point of view, but you also want someone that's open to a dialogue and isn't looking for a one-way communication.
One entrepreneur I work with, 2 years ago, he had an idea, and he came around the city and went to a bunch of events and showed his idea, and generally speaking, people didn't think the idea was very good, but liked him. And they gave him a lot of advice. He took that advice. He then started a different idea, and that was a little bit better, and then he started another idea and twisted it a fair amount. And all of a sudden, everyone was saying, oh, I really like this guy. And by that point, because he'd been through this process a few times, he had made a lot of contacts. And I talked to one investor that he went back to talk to who said, boy, when he set up a meeting with me, I almost didn't want to take it because I like the guy and I didn't want to shoot his idea down again. But he came in and, now you got something. Now I get it, right? And the gentleman offered to be in his advisory board and offered to help him out and made introductions for him and all that good stuff. So he had built those relationships, he had put in that time. He wasn't so emotionally tied to an idea that he was willing to push it aside and start new. And one case and another case just pivot the idea a bit, and at the end of the day, he's now raised, a little more than half of the first round. He's almost done with his first release of the product. He's got paying customers waiting for the product to be finished, and he's making a lot more progress this time around. But it took those couple of failures to get there.